AI penny stocks are some of the most exciting opportunities in the market right now. And for investors looking to multiply their money in the upcoming months, there are a few hidden gems that could transform a small investment into something much larger. So today we are diving into AI penny stocks that have the potential to make you rich. Each of these companies is carving out a niche in the AI landscape. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is BigBear.ai Holdings, ticker symbol BBAI. BigBear.ai is a company that is at the forefront of AI-driven solutions designed specifically for national security and critical infrastructure. What makes this company stand out is its unique focus on artificial intelligence applications that support military operations, defense readiness, and mission-critical decision-making. When we look at BigBear.ai's financial performance, the most recent quarter shows a revenue decrease of 18%, coming in at $32.5 million for Q2 2025 compared to $39.8 million in the same quarter of 2024. While the drop is mainly due to lower volume on certain Army programs, the company still maintains a massive backlog of $380 million as of June 30th, 2025. This backlog represents guaranteed future revenue opportunities, and it is often one of the strongest indicators of future stability in defense-focused companies. Gross margin slipped to 25% compared to 27.8% a year earlier, reflecting the pressure from lower revenue and higher research and development investments. The company did report a significant net loss of $228.6 million for Q2 2025 compared to $14.4 million in the prior year quarter. The huge increase in net loss was primarily due to non-cash accounting items, including a $135.8 million change in derivative liabilities tied to convertible notes and warrants, as well as a $70.6 million goodwill impairment charge. While those headline numbers might scare some investors, it's important to note that these are non-cash items and do not reflect a complete collapse of operations. On a non-GAAP adjusted EBITDA basis, BigBear.ai post a loss of $8.5 million compared to a loss of $3.7 million a year ago, again impacted by higher R&D spending. The company did cut back on SG&A expenses, reporting $21.5 million compared to $23.4 million last year, showing a disciplined approach to cost management. Currently, BigBear.ai's stock price is trading at $7.99, which positions it firmly in the penny stock category, but also gives it significant upside if its AI defense solutions continue gaining traction with the government. Wall Street analysts currently have mixed ratings on the stock, with an average 12-month price target of $5.75, ranging from a high forecast of $8 to a low forecast of $3.50. That average price target represents about a minus 18.79% downside from recent levels of around $7.08. But remember, analysts often underestimate the potential of AI-focused defense stocks. With a strong backlog and continued government demand for decision intelligence tools, BigBear.ai has long-term potential that could far exceed its current valuation. The second stock on our list is SoundHound AI, ticker symbol SOUN. SoundHound is one of the most recognized names in voice artificial intelligence and has been a pioneer in this space since it was founded in 2005. Headquartered in Santa Clara, California, SoundHound provides a voice AI platform that powers conversational experiences across industries ranging from automotive to healthcare, customer service, finance, and retail. Financially, SoundHound has been showing remarkable growth. For its most recent quarter, the company reported revenue of $42.7 million, representing a massive 217% year-over-year increase. That type of triple-digit growth is extremely rare in the AI space, and it highlights how quickly SoundHound's platform is scaling. Gross margin under GAAP terms came in at 39%, slightly lower than in previous years due to acquisitions. But when adjusted for non-cash items, non-GAAP gross margin stood at 58%, which shows strong underlying profitability potential. R&D expenses surged 64% year-over-year to $25.8 million as the company continues to expand its technological capabilities, while sales and marketing expenses soared 180% to $15.8 million, reflecting aggressive customer acquisition. General and administrative expenses also climbed 91% year-over-year to $18.2 million. As a result, SoundHound reported an adjusted EBITDA loss of $14.3 million and a GAAP net loss of $74.7 million, which was heavily influenced by contingent liabilities. However, on non-GAAP basis, net loss was a much smaller $11.9 million. The company ended the quarter with $230 million in cash and no debt, giving it significant flexibility to invest in future growth. SoundHound's operational performance is also noteworthy. The company currently has over 14,000 active restaurant locations using its platform, and it added 1,000 new locations in Q2 alone. Queries processed nearly doubled year over year to almost 3 billion per quarter. Looking ahead, SoundHound raised its 2025 revenue outlook to between $160 million and $178 million, signaling confidence in its growth trajectory. At a current stock price of $18.05, SoundHound is no longer as cheap as it once was, but it still falls into the high-growth AI stock category. Wall Street analysts have an average 12-month price target of $15.33, with a high forecast of $18 and a low forecast of $12. That implies a potential downside of about minus 5.66% from the last price of $16.25. But given the company's explosive revenue growth and expanding market presence, many investors believe SoundHound has much more upside in the long term. Last on our list is Guardforce AI, ticker symbol GFAI. Guardforce AI Company Limited is a company that blends traditional security services with cutting-edge AI and robotics technology. With over 42 years of operational experience, the company has built a strong customer base and extensive sales channels, particularly in the Asia-Pacific region. Guardforce AI focuses on implementing AI and robotic solutions to improve business efficiency, streamline sales processes, and enhance customer engagement. Financially, Guardforce AI reported revenue of $18.2 million for the first half of 2025, an increase of 3.6% compared to the first half of 2024. Gross profit declined slightly to $3.0 million compared to $3.2 million a year earlier, and gross margin dropped to 16.2% from 18.4%, mainly due to rising costs. SG and A expenses decreased modestly to $4.7 million from $4.9 million last year, showing some cost control. However, net loss from continuing operations widened slightly to $2.2 million compared to $1.9 million in the prior year. The losses were driven by continued investment in R&D and lower profitability. On the balance sheet, Guardforce AI ended the period with $25 million in cash, up from $23.4 million at the end of 2024, which gives it some cushion to fund operations and future expansion. Guardforce AI stock is currently trading at $1.29, making it a true penny stock play. Based on Wall Street coverage, only one analyst has issued a 12-month price target in the past 3 months, and that target stands at $1. That implies a potential minus 17.36% downside from the recent price of $1.21. However, analyst coverage on micro-cap stocks like Guardforce AI is often very limited, and such targets don't always capture the full potential of the company's AI and robotic strategy. If the company continues to expand its AI-driven security solutions and successfully grows beyond Asia-Pacific into other regions, Guardforce AI could surprise investors with meaningful upside. Well, that concludes our list of AI penny stocks with huge growth potential. From BigBear.AI's defense-focused AI solutions to SoundHound's explosive growth in voice AI and Guardforce AI's robotics-driven security offerings, these companies are proving that artificial intelligence is more than just hype. While they each face challenges in terms of profitability and market competition, their unique positions in fast-growing sectors give them the ability to scale and deliver value in the years ahead. For investors willing to take on some risk for the chance at major rewards, these AI penny stocks may represent a golden opportunity.